Welcome to The Explainer. Every so often, a story pops up in the tech and finance world that just makes you go, wow. And today, we're tackling one of those.
I mean, think about that for a second. Over 500% in just 1 year. How on earth does a stock do that? So, we're going to unpack what's fueling this absolute rocket ship. It's this really fascinating mix of cutting edge tech, huge global trends, and, well, some pretty massive investor bets on the future.
Okay, so to really get how a company can grow this fast, you can't just look at the company itself. You got to look at the world around it. And right now, there's what you could call a perfect storm brewing for high tech. And Exhale seems to be sitting right in the eye of it, riding some seriously powerful wave. What do I mean by that? Well, we're seeing this amazing convergence, right? On one hand, you have rising defense budgets across Europe. At the same time, you've got this lightning-fast development of drones and other autonomous systems. And it's not just military stuff. We're also talking about the huge shift to what they call Industry 4.0, super smart connected factories. All this is opening up brand new markets, like fleets of autonomous drones that can map the ocean floor. It's a huge deal.
And who's right in the middle of all this action? You guessed it, a company called Exail Technologies. So let's take a closer look at how they're harnessing these massive trends to fuel some pretty mind-blowing growth.
So, what's so special about Exhale? Well, their real power comes from this super specialized but also really diverse portfolio of technologies. Seriously, they are not a one-trick pony. These guys are experts in a whole bunch of interconnected, high-demand fields. We're talking from the bottom of the ocean, literally, all the way to outer space.
So, in plain English, they build the high-tech brains and the bodies for things that operate all by themselves. Think about a robot at the bottom of the sea, or a system in a smart factory, or even components for a satellite in space. They do the really complex stuff: advanced navigation, sophisticated robotics, and the core photonics. That's the tech that uses light. That kind of ties it all together. And this right here is their secret sauce. They're what we call vertically integrated. That means they control everything from the initial design all the way to the final product. And they do it in these really niche, high-value markets. That gives them this incredible competitive edge that's frankly super hard for anyone else to copy. Okay, let's get to the part of the story that's got everybody talking, the numbers. Because, the backstory is fascinating, but it's the performance data that's really making jaws drop. First off, the business itself is just booming. In a single quarter, revenue shot up 52%. But maybe even more important is that new orders jumped by 51%. That tells you that demand isn't just strong, it's actually picking up speed. But here is the number that's just stunning. The stock price has exploded. We're talking a gain of over 550% in just a little over 7 months. That's the kind of performance that doesn't just turn heads, it makes the entire market stop and stare.
And this really tells the story of that explosion. You can see the growth hasn't just been steady, it's been accelerating, like exponentially. I mean, gaining over 100% in 3 months is wild. But then to jump to almost 500% in just 6 months, that shows you that the enthusiasm in the market is hitting an absolute fever pitch. Okay, so we've got this insane growth. The big question is, what do the numbers underneath it all say? Is this performance actually justified by the company's financials? Or is something else going on? To figure that out, we need to look at a really common metric called the PER, or price-to-earnings ratio. It's basically a quick way to check how expensive a stock is compared to how much money the company is actually making right now. All right, this is where you can really see what the market is thinking. Let's focus on that PE ratio. For 2025, the estimate is a whopping 152. That's really high, but, and this is the key part, look at the forecast for 2026. It's expected to drop all the way to around 62. The other metric here, which compares the company's value to its sales, tells a similar story. So what does this mean? It means the current price looks really steep, but it's expected to look a whole lot more reasonable next year because everyone's forecasting a huge jump in profits. That's the bet investors are making.
Right, so a PE ratio this high sends a super clear signal. People investing in this company aren't buying it for what it is today. They're buying it for what they believe it's going to be tomorrow. That stock price is basically one giant vote of confidence in massive future growth.
So, with all that in mind, what do the pros think? The financial analysts who cover this stock for a living. Are they buying into this optimistic story? Well, the verdict from the experts is pretty clear. When you look at the consensus of 6 analysts who follow the company, their average recommendation is a straight-up buy.
So, yeah, the pros who watch this company day in and day out seem to think it still has more room to run. And they're putting their money where their mouth is, so to speak. The average price target from these analysts suggests there's still a potential upside of over 8%. And the source material we're looking at for this explainer, it's even more bullish. It's estimating a price somewhere between 140 and 180 euros within the next 12 months.
Okay, but, and this is a big but, a story of explosive growth like this almost always comes with some serious risk. It's so important to look at the other side of the coin before just getting swept up in all the hype. In fact, the financial brief we're drawing from includes a really important warning. It says it right there in black and white. The stock's massive run-up and its volatility, well, that suggests a high level of risk. And that's just common sense, right? A stock that goes up this fast can come down just as fast, if not faster.
It's also worth pointing out that Exail is in a classic full-on growth mode. That means it doesn't pay out any dividends to its shareholders. Instead, every penny of profit gets plowed right back into the business to try and fuel even more growth. For an investor, that means one thing. The only way you make money is if the stock price keeps going up. So you see, it really boils down to this classic Wall Street story, the bulls versus the bears. The bull case, it's all about those massive tailwinds in their sector and the incredible revenue growth. But the bear case, it's screaming about extreme volatility and the huge risk that's baked into that super high valuation. That's really the heart of the story for Exail right now. Incredible potential on one side and some pretty significant danger on the other. And so that leaves us with the big multi-billion-dollar question, doesn't it? Is what we're seeing with Exail Technologies the start of a long, sustainable growth story that's built on truly game-changing tech? Or is it a classic volatile bubble, just fueled by hype and waiting to pop? The truth, as it often does, probably lies somewhere in that tricky space between incredible opportunity and very real risk.